Welcome to another S&P 500 analysis. Today, September 23rd, 2022. Today, the S&P 500 capped off a week of economic news, and the S&P 500 came down near the June's low and held above it just by a little bit over 10 points. So is the test of the June's low over, or is this just a precursor on what to come? In this S&P 500 analysis, we will review the market sentiment, market internals, the price action of the S&P 500, and the other major market indexes, and to see is the market telling us to be ready for a lower low or this is a double bottom for a reversal. Stay tuned. And before I begin, just a few reminders. If you have any question for me about the tools I use for my analysis and my analysis technique, post them in the comment section below. And after I have compiled a list of questions, I will do a Q&A video to answer them. And if you'd like to see additional content from me during the week, go visit my Substack page at smtraderCA.substack.com. And also be on the lookout for my Sunday video on the SPY QQQ IWM, where I will discuss price level and price scenario to watch for the coming week. And finally, don't forget to smash the thumbs up to help promote this video on YouTube. And if you are not a subscriber, click on the subscribe. Now let's go to the analysis. Looking at this weekly chart of the S&P 500, as you can see, that's another week of more than 200 point range. This week it had a range of 259.60 points. It closed the week with a loss of almost 180 points or 4.64%. It came close to the June's low. It made a low approximately 11 points above the June low and closed above the June closing low. It also closed below the 10-week and the 40-week moving average. And looking at this sentiment chart here, on Friday, the S&P 500 closed down 1.72% or a little bit less than 65 points, but at one point during the session, it was down more than 110 points. And we see the VIX here on Friday, it actually went above 30 on intraday with a high of 32.3. Even though it closed at 29.92, the put-call ratio also went up to 1.35 at the open and stayed near this 1.25 throughout the session and closed near that same level. And the New York Stock Exchange up-down volume ratio went as low as almost 28-1 on intraday in favor of the down volume. It ended the session at almost 10-1 in favor of the down volume, near the minus 9.8. And the advanced decline, the daily advanced decline, it was almost 2,800 more declining issue than advancing issue intraday on Friday. And it closed the session with 2,465 more declining issue than advancing issue. And the number of stock make new 52-week low in the New York Stock Exchange exceeded that on June 16. That number of stock that make new 52-week low on that day was 1,099. And today on Friday, there were 1,109 stock make new 52-week low. And here looking at the New York Stock Exchange cumulative AD line, this cumulative AD line took out the June low, but look at the S&P 500, it's still close above the June closing low. So we are seeing a negative divergence. And looking at the NASDAQ 100 closed down 190 points or 1.67% on Friday, but at one point it was down almost 330 points. So it came back during the last half an hour or so, and that's probably due to the OPEX. So in regardless, we are looking at the up-down volume ratio. It was as low as 5-1 in favor of the down volume during the intraday, and it closed with a 4-1 in favor of the down volume. And the intraday, there were a little bit over 3,000 more declining issue than advancing issue, and closed the session with 2,766 more decliners than advancers. And on Friday, there were 1,222 stock make new 52-week low, slightly more than the June low, but less than the extreme that we saw back in January and in May. Here on the cumulative AD line for the NASDAQ market, we'll also see that it continued to make low And we already saw that took out June's low a couple days ago. And right now it is continuing to make new low. And also the NASDAQ 100 is still closing above the June closing low. So similarly to the S&P 500 and the New York Stock Exchange cumulative AD line, it is showing a negative divergence. So the sentiment is showing the market participants are getting more bearish and more fearful. The up-down volume ratio did show some panic selling during the Friday session, and stock make new 52-week low came up to the June level, and the daily advance decline show a broad market sell-off on Friday. And the cumulative AD line from the New York Stock Exchange and also from the NASDAQ market was showing a negative divergence, and I will elaborate more on this in my summary at the end of this video. Now let's take a look at the interest rate, US dollar, oil, gold, and silver. On the 10-year yield, we're looking for this 3.75%. And as you can see, it went above that on Friday. It went as high as 3.77%, even though it closed back down below it, closed at 3.697. And the US dollar shot above this 112 level and getting close to this 113. We're still looking for the possibility of coming up to this 117.67 area. This is the 100% major move from this consolidation area. And for crude oil, we saw crude oil sold off on Friday as the US dollar strengthened. And for silver, we're watching for a possible rejection from this low volume zone. And we got that rejection, and it came down to this 1880 area near this high volume node. So right now, we're basically monitoring to see what it come down to this this low volume zone here, this gap here, somewhere around 1830, or would it dip down and test this $18 level, the next high volume node. And gold came down to this 1650 level that we were monitoring. And right now, we need to wait and see to see would it get rejected and get a bounce back up to this 1707 area, or would it continue to dip down to possibly down at this high volume node near 1625. Now let's take a look at the index E, starting with the S&P 500. On this daily S&P 500 chart, we see the price started to come down after the FOMC announcement, and a huge gap down below the lower range of this weekly expected move on Friday. And it closed below the expected move and fill this June 21st gap. We also notice a late day bounce into the close, and that's probably due to OPEX. So as of Friday close, the S&P 500 is back in a bear market territory. It's down 23.35% from its January high. So for next week, the another 200 more point expected range, and the upper range of the expected move is between 38.35 and 38.15. And the lower range of the weekly expected move is between 35.72 and 35.35. So here's the downside scenario that we'll be watching for the coming week. We're going to see is it continue to move down and test its June low here and close below it, and then work its way down to this lower range of this weekly expected move. And a possible upside scenario for next week is to come up and fill this gap and then move back up toward this zone here at near 3800 level and possibly get into the upper range of the expected move. NASDAQ 100 also started to move down after the FOMC announcement, and it dipped below this 50% retracement level, and it's still above the June low. And right now for next week, we're basically looking for it to continue to dip down and take out this June low and possibly move toward this 618 retracement near 10,600 area. And the upside scenario is to come up to fill this gap and also possibly get into this area and move back toward the 50% retracement level near 11,768. And for the Russell 2000, it also moved down from the FOMC announcement, and it dipped below this 50% retracement and still staying above the June low, above this near this 1650 area. So for next week, The downside scenario we'll be watching is to come down and pick out this June low and possibly move down toward the 61.8 retracement level near 1536. And for the upside, we're essentially looking forward to see would it be able to get back above this 50% retracement above 1712 and fill this Friday's gap and see would it be able to continue to move up to near this zone here around this 1800 level. And the Dow Jones Transportation dipped below the 50% retracement level near 12,360 and closed with a new corrective low. So the downside scenario is to continue to move down and possibly get down to this 11,360 level on the downside. And if it get a little bounce, then we'll look for a possible filling the Friday's gap and get back above the 50% retracement level. And for the Dow Jones Industrial, the Dow Jones Industrial also broke below this 38.2 retracement level and closed with a new corrective low. So we took out the June's low. And right now on the downside scenario, we're basically looking to a continuation move down into this zone below this 29,000 area and see would it be able to find support. Then on the upside scenario, it's essentially come back up to this 38.2 retracement level above the 29,800 and see would it be able to get back above the 30,000 area. And the New York Stock Exchange Composite Index also closed with a new corrective low. It took out the June's low. And right now, we're basically looking for a continuation on the downside and dip down toward this 50% retracement near the 13,000 level. Now, if we could make it back up above this 38.2, that would be our upside scenario, making back up above the 38.2 retracement level, up above 14,100 area. In summary, the market finally got the Fed's message that it doesn't care if the market crashes or the economy go into a recession. It will do whatever it takes to bring inflation back down to 2%. The market internal are near the June extreme, but what is most telling is the negative divergence between the cumulative AD line from the New York Stock Exchange and also the NASDAQ market. It is telling us to look for a new low and monitor the internals closely when the indexes makes a new low for clue to see if there is a newer low coming or is that a reversal. So once again, the market has reminded us to always respect the internals. This is not a game of being right or wrong. It's all about being on the right side of the trade. And are you making money? So put your ego aside if you happen to get caught on the wrong side. Be sure to smash the thumbs up to give it a like and help promote this video. Thank you for watching and stay safe.